All right, everybody. It is Friday, about 5 minutes after 5 o'clock Eastern Time. And, we can kind of see ticks coming by here, but really the market is, for all intents and purposes, done for the week. We had a very volatile week. You can see here that the market did manage to poke above our two high points here before finally plunging down below this little cluster of support. But you also notice that in the waning hours of today's trading that the market did manage to pull up off of the bottom. So there is an indication of some buying here at the end of the week, which is not surprising given how fast the market came down. Remember that when the professional money is looking to buy, they have to force the price down and they have to try and draw sellers into the market. Because you have to remember that you've got the market maker here in the middle who's passing orders from one person to another. So if you have somebody over here who needs a big player who's trying to buy either a lot of dollars or a lot of pounds, the only way that this person can buy is if someone over here is selling. The market maker isn't necessarily just going to dump their inventory to this particular buyer. What they may see is they may see that this buyer has a big order out there, so the market maker will have further reason to drive price down, again trying to entice other sellers. The market maker, seeing how he's got the book, may know that there are orders to sell in this area here. He drives the price down there, triggers the sell orders. He then comes across, fills these buy orders at a profit to him or herself. Very, very common tactic. It happens all the time. It's just the way that the market works. So you've got to learn to, first of all, think in terms of the market. How is the market actually operating, and not thinking in terms like a regular retail buyer. For example, retail buyers have a tendency to think when you see a lot of momentum like this that price is just going to continue moving up. But from the market's perspective, when you have a very fast move up like this in 2 weeks, you have to understand this market in 2 weeks moved from 8,900 to almost 9,900. So you had a 1,000-point move in 2 days. I mean, in the Forex market, you have to understand that retail traders like us are a very, very small part of the market. So a 1,000-point move is, trillions of dollars practically in real money that's being pushed around in trading hands. That's having a real impact on business and banking all over the world. So the first thing that I suspect when I see price moving up like this very, very quickly is that the market is going to come down fairly quickly. And it's going to come down, try and find a support area. Now, if the move it has a fundamental reason, in other words, if traders' opinions have changed and the traders' opinions are that the market now needs to be higher, you'll see the market come down so that other traders can get in. You'll see a support area form like this, and then, of course, you'll see the market starting to move up. Now, we may be seeing a test, what I call a retest, of the support area. You can see that the market has moved down into the prior area. If you will recall, over the last several weeks, I've been calling for the market to come into 96.20, which it did on the low today, to get right into the middle of this support area, just because I felt that that's where the big money would want to try and push the market down in order to see if there were any other sellers out here. I really do think that we're going to be looking at the market moving up because of this retest action. Now, again, we can't see actual volume in the Forex market, but if you notice here, first of all, these bars were very small. When the market came into this area for a weekly range here, these bars were very small. But then finally, when the market did push down, and it had a big momentum move down, you can see that the market was unable to close on or near the low of the day, or of the week rather, again indicating that there was some buying. So my bias, at least at this point, is that we're going to see a move back up at least to this old high, if not a breakout move considerably higher over the next few weeks for the British pound. Now, having said all that, one of the things that I want to talk about here is what happens when you run into streaks of losing trades. No trading methodology is ever 100%. That's because we as people have a tendency to make errors, mistakes in judgment, slips of the finger where we buy instead of sell instead of buy, that sort of thing happens all the time. But also, when you're trading a purely technical-based system, it really does rely on probabilities, but it also relies on your mental state when you're trying to trade. I was on the phone with one of the members today, and he had run into a string of bad trades, losing trades, and I told him, look, get on the phone and call me and let's talk about it. And before he ever got on the phone, I knew what was going on because it happens in my trading, and it's happened over the years that I've been coaching other traders. First of all, the number one mistake that we can make as traders is not